Welcome to Momentum Monday. Today is November 27, 2022. I hope you had a great Thanksgiving weekend. Howard, what about you? Did you have enough to eat?
Yeah, I'm not a Thanksgiving food guy. I mean, I don't like chips and turkey and potatoes. So yeah, it's good, but it's a good family weekend. How about you?
Well, the same for me.
Well, what
I
family? You didn't have family in town, did you?
Yeah, I did not have family with me. I cooked something different this time
Yeah,
instead
what'd you
of
cook?
turkey. Well, it's called moussaka. It's like a Bulgarian/Greek dish with ground beef and potatoes and some mushrooms and other vegetables just baked with some eggs and cheese on top. It was first time of me doing it. It was really good, pretty good. I'm surprised at my cooking skills. Maybe
Oh boy.
I should have gone in a different direction.
What do you see this week?
So looking at the markets, the S&P is back to its 200-day again. Maybe this time it's gonna reclaim it at least for a little bit, as the Dow has already done so. Obviously, big weight here. We have the industrial stocks and some of the big pharmaceuticals, biotech stocks that have been outperforming in the past 3 to 6 months. Definitely helping some industrials doing well. In financials, obviously, most financials are, believe it or not, are up about 30% or more for the past quarter ever since they reported earnings. So
Yeah.
it seems like at this point the market is not worried about credit risk. It's just seeing the
Well, I mean,
opportunity.
they also lost a competitor in crypto, right? Like, there's no they don't have to invent anything new, right? The whole another sector blew itself up before it fully connected to the banks. So, at some level, it's a shame, but good news for the banks. There's no systematic. The speculation has stayed on the digital side, software. Like, I think the most interesting chart, yeah, the J.P. Morgan, Goldman Sachs. If you look at the Vanguard Value ETF, VTV, Victor Tom Victor Ivan, and that's kind of like Exxon, Chevron, United Healthcare, J.P. Morgan. If we can get above all time, I mean, this will be the first index to really get back to all-time highs here. What is it on the year?
It's only 4.5% below its 52-week high, so it's not there, but it's close.
Yeah, look at the bounce off.
5%. Yeah.
Yeah. So this next pullback, if there is one, will tell you a lot. But these are humongous companies: Exxon, Chevron, United Healthcare, J.P. Morgan. So this has been the index, this and the Dow this year. So I'm watching. Listen, they're all 8 to 80 names. I just got them wrong. The market's just kind of moved to boring value, slow growers, which is, in many ways a good sign, right? It's not systematic financial problems. It's the Carvana. It's just all the lending and fintech and fake banks, or the neobanks. Billions and billions of dollars from the PayPals and Squares that have been wiped out. And, the non-public neobanks like Chime's probably down 30 billion. So what's the valuation of PayPal? Yeah, and Square. It seems like
92.
to go up 500-600% to break even. So we've lost $1 trillion in fintech, if you count private and public markets. So it's real money. And then you count a couple trillion in crypto, and you've got 3 trillion in speculation just kind of wiped out. But yet JP Morgan and Citibank and Goldman Sachs, the companies we love to hate from 2008, feeling no effect of this. So it's pretty interesting. It really is, in fact, cordoned off to the cloud for whatever reason, probably just valuation and burn. And then you've just got massive layoffs coming. So if I look at Google, But I was listening to a few podcasts where they have 200,000 employees. So could they run with 100,000 employees? So that's the they have so much room to do stuff for Wall Street. So this is kind of the one I'm eyeing in tech as kind of my tech ETF as I kind of regroup and think about tech in the future. Even Microsoft, unfortunately, I just hate the fact that they got a kind of a monopoly. So it's really kind of interesting. And Amazon's the first company to lose $1 trillion. So throw in Amazon and you've got, $4 trillion, wiped out. So the market's been pretty resilient. I think what we want to watch is this VTV, the bonds in the US dollar, and obviously
Definitely the US dollar, big
sell-off.
Big mover, big reason for moves. Basically, the bounce that we saw last week in tech and other stocks was mostly due to the pullback in the US dollar. It is currently has a much bigger impact than interest rates.
Yeah.
So
yeah,
this is
so
the one.
There's a lot of cross currents as we head into the final month of the year. So take it away. What are you seeing? So you've got some breakouts that I talked about last week. Axon still looks pretty good. That's Taser. Well, yeah.
I mean, in general, most breakouts haven't really followed through unless there has been like an immediate earnings. Like here, we have immediate earnings, so it followed. It's holding that absolutely. But I'm saying that technical breakouts, the ones that are not just with immediate earnings release, they for the most part haven't followed through in this tape. But we also
and Axon's still 60 times earnings. So another one that looked interesting is which is Clear. I love Clear.
Which one? Yeah, definitely. Yeah. Breakout after earnings again. Look at it. This is an earnings breakout, sideways consolidation, then kind of trying to follow through.
I mean, they have to expand the product line beyond airports, and then obviously in biotech, Vertex, and a couple of the ones that you pointed out still look pretty good.
Yeah, Vertex. I mean, many of them have been very volatile. This is like how many people can really hold something like this that basically can move 20% in a day. And here we're talking about a large cap that has an 80 billion valuation. And then on a day-to-day basis, it can drop or jump 20%. And it's like from 320 to like 290, maybe not 20, but 10%. That's a pretty big, significant volatility for a stock. But as you can see, the dips to the 20 to the 50-day moving average are getting bought, but then the breakouts, it seems, are getting sold. So it's kind of range-bound, choppy market, at least the past couple of weeks.
Yeah. Well, as we end this era of speculation, and you've got inflation, recession, the playbook says value, and long overdue. Yeah. So you know where to look. We've kind of spotted where you should look. I don't have much else to say. The rest is like just, seasonally, we've talked about in a bear market, this has been not a great moment. But at the same time, there's so much bad news out there. I'm just trying to follow the price at this point. And in the Qs, in the NASDAQ 100, I mean, that 250-ish, that 250-ish bottom right now, I'm kind of like my last stand. The stuff that I've held, I'll revisit if we get back down there. But these have come down a long way. The froth that I see, as I keep talking about on StockTwits and Twitter, is this silliness around speculation. ARK, she continues to say crazy things and triple down, and now she's got a price point of $1 million. This is not somebody you want managing your money when their best idea is Coinbase and Bitcoin. She was buying GBTC, and her only reason is that it's a discount And I got stopped out of that a long time ago, but only reason it's trading at a discount, but the company that controls it is rumored to be in bankruptcy. So, for someone that's like focused on growth, it seems like the last playbook, and I'm guilty of this too, is broken. And, this value cycle, as I've talked to a bunch of great value traders and investors, this was a long time coming. And this thing can, when the people on the growth side are just can't switch up their playbook. You do, because you're, a swing trader, so you constantly see new tickers and industries coming into your zone. But the crossover people and even me, but I don't do this for a living, and the people like Cathie Wood, they can't get out of their own way. And it's a pretty interesting moment, because this is not the stuff that you normally see at capitulation, is people putting crazy price targets on inanimate objects.
Yeah.
And then at the same time, there's just a lot of companies out there that are kind of zombie Walking Dead, that have plenty of cash but aren't growing.
Well, bear markets typically have what, like two phases. The first one is big price drop, and then the second one is just a very long sideways move that just exhausts and wears people out. And so maybe we'll have a very long second phase.
You may have a long second phase, but like 01, 02, 03, home builders took off. And here we can look at the value. You can take apart, you can go to Koyfin, Koyfin, which is one of my companies, and you can go take apart VTV and just take a look at the companies that make up the index. Oh, thanks, Evan. Oh, you're not logged in, but you go in, and if you search the ticker, you can see the holdings within that. And so there's lots of work that you can do and try and find some kind of value ideas that have catalysts. Could be dividends. But I'm going to start digging into that more and more. I'm not an oil person, so XLE's been the trade for the last year and a half, and don't know if that's getting long in the tooth. But if it does, there's tons of other value stocks, and the financials, honestly, like, they've kind of gone nowhere in 15 years. So, right?
Yeah. And
so, in a gradual rising interest rate world, they have a lot of power. And, if anyways, there could be an interesting cycle setting up in financials.
Yeah, it seems like we'll continue to see that rotation out of tech and into other sectors.
And all the speculation feels confined to venture capital, growth venture capital, the SoftBanks, the ARKs, the Tigers, and they can only go to zero, and the crypto stuff that's leveraged has gone to zero pretty fast. I mean, it looks like Mas is blowing himself up because he borrowed $5 billion against a broken company at this point. So that thing's highly levered at this point. But the S&P, considering all that leverage, the S&P looks really good.
I mean, I was gonna say that I think the main tell that this bear market is over is not going to be the S&P going above the 200-day. That could happen any moment. I think it would be the Qs, because they were the one that were hit the worst. So once we see the Qs starting to trade above a flat 200-day, that'll be kind of the sign that maybe things are really turning. Yeah,
and the semiconductors are on inches away as well.
Yeah, some of the semis are definitely looking constructively, like the US-based one, the GFS, like kind of setting up for potential breakouts. Obviously, the solars, like all of those sectors that kind of benefit from the government's fiscal policy and just new spending programs, like solar and semis are kind of holding well and potentially setting up for a breakout. Obviously, we said that technical breakouts haven't really followed through in this tape, that buying on dips to the 20-day and 50-day has kind of delivered better results. if you're a swing trader than just chasing a breakout, but who knows, things might change.
Yeah. Yeah. Okay. Well, I think we've beaten a dead horse. I think everybody now knows it's not just energy.
Oh, definitely not just energy. I mean,
Yeah, it's not just energy and
industrials
it's
and
not just solar
financials.
anymore. There's
Yeah.
industrials, there's Pepsi, there's conglomerates.
Consumer staples, exactly. Yeah, definitely a lot of the 52-week high list has been expanding and the 52-week low list hasn't. So that doesn't mean that tech can go down lower. We've seen a lot of the cloud companies kind of bounce 20-30% or more in the past few weeks, and actually in the next week or two, many of them report earnings. They will wrap up the earnings season, so it will be really interesting to see how the market is going to react. So far, the earnings season has been mostly bullish. We've mostly seen positive bullish market reaction to earnings, even in retailers that are kind of
the retailers are finding some kind of bottom here. Look, they're brick and mortar retailers.
Yeah, missing earnings estimates. Look at this negative sales growth, negative earnings growth, and yet the market is responding favorably. And you know what they say, that typically stock bottom when we see positive reaction to bad news.
Yeah.
So maybe the market is seeing something 6 to 9 months down the road that
well, they can really do a $1.56 in earnings. These are cheap stocks, right?
Most people are not seeing. And remember, the market really strives to live in the future. We saw the same thing with Zoom, which for many quarters they were reporting really strong earnings, and yet the stock was declining, right? Yeah. Kind of the market was expecting that at some point we'll see what we're seeing in the past couple of quarters, kind of negative growth. So the market lives in the future. Don't just look at the numbers and say, oh, this company is trading too cheap. I think it's for retail investors, traders, it's better to look at price action than try to look at earnings growth and sales growth, because the market is smarter than most of us.
Yeah, very humbling this year. Okay, thanks, Ive. Thanks, everybody. Everybody had a good Thanksgiving. We'll be back next week.
Yeah, see you, Howard.